Sometimes I want to quit and give up, but I realize it's not my time. In fact, I'm never here to give up. I'm here to go up. I'm here to soar beyond the clouds. I've been homeless. I wanted to give my life up. I have had everything thrown at me. I have been rejected, but I rose above it because I know who I am inside. The question is, do you know who you are inside? Your circumstances, your challenges, your losses, everything that you have endured in your life, if you're standing on your 2 feet right now, if you got breath in your body, you are not done. You have power right now. You have strength right now. Don't let nothing hold you back. I'm here to give you the message of hope and understanding that no matter what struggle that you are going through, no matter what pain you are going through, let your pain be your passion.
Everyone is given 24 hours per day. Some people are super productive, while others
cái nào cái mà nhảy á, cái video nhảy á.
Em không thấy đường.
Cái bên kia workout, yes, cái đó. Rồi. Yeah. Rồi, bấm to ra cái đã rồi. Okay.
Hey, Walking Home family, Selena here, coming to you from my hometown, the beautiful Pittsburgh, Pennsylvania. And look where we are. We have Steel City views, and we are ready to get Steel City fit, and I hope you are too. Look at our beautiful cast and who's leading us today. Hey, Nick.
What's up? How's it going, everybody? Steel City Mile. Let's go. Come on, right here. 4 basic steps for our warm-up, and we're gonna get moving. Side steps are coming. 4, 3, 2, and 1. Let's go. Side step. Out together, out together. Good. Bend those knees. And beautiful out here. It's a beautiful day to get fit, to do something healthy for your body. We're doing it Steel City style. And what do you think about when you think about the Steel City?
City of Champions.
That's right. City of Champions. Pittsburgh, PA. Strong, resilient, endurance. All that good stuff. So I want you to put that into your head. 3, 2, and 1. Let's walk. Good. Very nice. Knees are coming. Here we go. Up 4, 3, 2, and 1. Let's go. Feet. Good. Just like that. Think about that core. Start to fire it out. Let's go. We're on a boat today. So we've got to make sure we're working that core. We don't want to fall over. Here we go. Good. 4 more. 3, 2, and 1. Let's walk. How we doing, guys? We good?
We're doing great.
We got Justin and Jordan back here. The twins. Little known facts. I'm the third twin. Yeah. Give me. I need to kick. Okay. 4, 3. Kicks coming. 2, and 1. Let's go. And kick. Good. Very nice. 4 more. 4, 3, 2, and 1. Let's walk. Good. Very nice. Think about that posture. If at any point you get lost during this workout, go back to the walk. Okay? Except for Selena, I know you like kickbacks.
I love the kickbacks.
Right? We all have our favorites, but it's about the pace. It's about the tempo of the music. So keep it right there. Side steps are coming. Ready? 4, 3, 2, and 1. Let's go. Side step. Good. Very nice. Every single movement we do today is going to be based on these 4 moves. We're going to get lateral movement, front and back, things that you're not going to get on a traditional walk. So we're excited that you're here, welcoming us into your home today. 4 more. 4, 3, 2, and 1. Let's walk. Good. Yeah, there you go. Starting to feel that sweat a little bit. We're starting to move.
Oh, yeah.
Yeah, good. Knee lifts are coming. 4, 3, 2, and 1. Knee lift. Good. Nice little tap here on the knee. Think about it. It's like a standing crunch, right? We're going to use our core throughout our entire day. You don't realize it, but you're using it. And we want to continue to practice that. Having that core engaged, it's going to help our quality of life down the road. 1 more. 4, 3, 2, and 1. Let's walk. Good. Very nice. Good. Kicks are coming. 4, 3, 2, and 1. Here we go. Fast walk's coming.
Oh
Good.
boy.
Good.
Woo.
Right there. Pick it up with a fast walk. Good. 4, 3, 2, and 1. Let's walk. Slightly faster pace. This is our fast walk, yeah? 1 notch under our top speed, okay? Here we go. Same moves as we did in the warm-up, only bigger, with more intensity. Here we go. We're gonna go knee lifts right away. Here we go. 4, 3, 2, 1. Knee lift, go. Huh. Good. Bring these arms up nice and tall. Bring it down.
Full body workout.
That's right. We're working the front and the back of our muscles and all the way around. We want good balance today, and we're gonna feel that. Woo! I'm already feeling that. Ashley, how we doing back there? Jeff, good? All right, good. One more. 4, 3, 2, 1. Let's walk. Good. Very nice. Now what we want to do is start picking those knees up. Yeah, good. All right, side steps are coming. 4, 3, 2, 1. Let's go. Side step. Good. Very nice. Good. Arms, come on. All right. Can we take this right to a double side step? Double
I
side
think
step.
so.
We got it. Come on.
We got this.
4, 3, 2, 1. Jump. 1, 2, go. 1, 2. You got it. 1. Bend those knees. The faster we move, the more you want to bend your knees. Come on. So you're getting the side step away from the Clark bar. Another pistol.
Oh, yeah.
Yeah, I know.
Manny's, I see it down there, Nick.
Manny Brothers and Pierogies. You can almost smell the Heinz ketchup in the air. 4, 3, 2, and 1. Let's go. Good work. Mini squats are coming. Here we go. Feet wide base. Here we go. 4, 3, 2, and 1. Let's go. Mini squat. Ha. There it is. Good. Good. What you do, stuff. Come on. Let's punch. 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 Good. Good. Very nice. Let's punch up in 4, 3, 2, and 1. Let's punch up. Come on. Oh yeah. 4, 3. I know. 2, 1. Let's walk. Anytime I hear that old man, that means it's time to move on. Yeah. Good. All right. Let's go. All right. Knee lifts coming. 4, 3, 2, and 1. Let's go. Knee lift. Good. Right here. Think about putting these elbows right in front. Squeeze those elbows together. A little crunch. 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 There you go, Allie. Crunch. Crunch. How's my brothers doing back there, Justin and Jordan? Yeah. Look, I'm so quick. All right. I guess I make it triplets. 4, 3, 2, 1. They got all the good stuff now. Okay, I'm not mad. As long as they let me play on the same flag football team. All right, here we go. Good, right here. Kicks are coming. 4, 3, 2, and 1. Good. We're going to take these kicks into a transition to our top speed. Good. Right here. Kick, step, kick, step. Good. 3, 2, and 1. Here's our boost. This is our top speed right here. Yeah.
Oh, man.
Okay. This is the fastest and most intense we're going to go today. So do me a favor. Lift those knees. Come on. High knees. Come on. Woo. Come on. 1, 3, 2, and 1. Let's walk. Good. Power walk right here down into the ground.
Nick, I see the people of Pittsburgh wanting to join us over
I
there.
know.
Come on aboard! Come on, Pittsburgh! Walk with us!
Feet shoulder width apart. We're gonna go kick back. Here we go. 4, 3, 2, 1. Let's go kick back. Good. There you go. Pull it back. Woo! There you go. Keep coming. 4, 3. The arms are gonna come up. Same movement. Let's go. Up to the sky. Just right there. Hold it down. 4, 3. Now pull it down. Oh, boy. Here we go. Pull it down. Yeah. Good. Very nice. Yeah. Good. 4, 3, 2, and 1. Let's walk. Good. Oh yeah, good work. Do me a favor. Start to do this one more time. Come on. All right, let's go. 2 up, 2 back. Here we go. 4, 3, 2, and 1. Just a little bit. 1.
You out there, Zoom, dance with us, walk with us. It's a 1 mile walk every day, guys.
Yeah, good.
Give yourself some energy.
2 last one. Run in place right here. Come on. Very nice. Power walk. Let's go. All right. Can we grapevine?
So much fun!
I love the excitement.
Grapevine!
Yes, a grapevine. Here we go.
Yeah.
4, 3, 2, and 1. Let's go. Let's step. Back, step, step, step.
Yeah!
Yeah, there we go. Hup. Hey. All right. Good. Good job. 4 more. 4, 3, 2, and 1. Very nice. Good. Needless. Here we go. 4, 3, 2, and 1. Sing. Ha. Ha. Just go down. Down. I'd like to do some doubles. Here we go. 4 more. 4, 3, 2. Double it up. Here we go. 1, 2. Come on. 1, 2. 1, 2. 1, 2. 4, 4, 3, 2, and 1. Let's walk. Come on. Woo! It's mighty quiet back there. Come on.
I gotta focus on the breathing.
Hey, champions don't wait, right? Champions make noise. So come on. That's right. Here we go. Yeah. All right. Last little move. Come on, right here. These up. Last 10 seconds. Let's go. We see the tank, and then we're heading down the mountain. Let's go. 4, 3, 2, and 1. Let's walk. Good. Hey.
Are we cooling down?
Nope.
Oh.
Not yet.
Not yet.
There's always one more championship to win, Selena.
Oh, you're right about that.
Yeah. So we got 3 minutes. This is our last segment before the cool down.
All right.
Start to bring that heart rate down just a little bit. We're not bringing it down to a resting level, but we're bringing it down to a working level that we can breathe. Yeah, we should be able to talk while we're doing this. Good. Very nice. Let's push these up just like that. Good. Very nice. Good. Let's raise them up in 4, 3, 2, and 1. Let's go. Up. Yeah, you got it. Come on. 4, 3, 2, and 1. Good. Just walk. Come on. All right. We're going to go right to double side steps. Double side steps. Here we go. 4, 3, 2, and 1. Let's go. Double side steps. Good. From here, we're going to add a punch. Okay? I'm going to show you. Jump on when you can. Step together, step and punch. Step together, step and punch. Step together, step and punch. Yeah, good. Very nice. Good, very nice. Good. All right. We're going to transition this into one of my favorite moves, the skater. Yep, so all that foot is doing now is going to cross back. Here we go. Cross back, step together, step cross back. Yeah, there you go. I'm using my arms right here to pull in. Good. There it is. Twisting that torso, that core. All right, my waistline is calling. Woo!
Feeling it all over.
3. It's tough, 2, 1. Good, walk. All right, very nice. Hold it right there. Take a deep breath in. Action, we good? All right, man. Good. Nobody's jumped off the boat yet, so we're good. All right, come on. All right, tap out coming. All right. Woo! 4, 3, 2, 1. Here we go. Top out. Like that. Good. Very nice. Good. Hold it right there. Let's start to twist the torso. Twist. 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 Good. Can you punch it out? Should we let it punch? Punch. Oh, good. Twist them up. 4, 3, 2, and 1. Let's walk. Good. All right. Very nice. Woo! We're gonna go 2 up, 2 back to finish this segment out. Here we go. 4, 3, 2, and 1. Let's go. 1, 2. Come on. You got it. Yeah. You want a little sit and little mini boost? Just a little one. We're not running. Yeah. Yeah. Good. Very nice. 2 more. 1, 2. Good. Now walk. You make it right here. All the way up to the end of the segment.
Hi, Bernard. Hi, Bernard.
All right.
Hi, Bernard.
Yeah.
Let's walk with us.
Yeah, there it is. Now we're in cool down. Now we're in cool down. Yeah, that's it.
Yeah, that's it. Bernard, that's it. Move your body.
That's right. We earned it. Good. All right. Very nice. Feet are coming forward with the heart. Little kick back. 4, 3, 2, and 1. Let's go. Kick back. Yeah, we're hamstring first. We're gonna do a little stretch after this. I know it's the moment you're like, oh, it's cool down. I can stop walking. But your heart is still working. So we won't get it. So stay here with me. We're almost done. In less than 3 minutes. Come on. 4, 3, 2, and 1. Let's go. Let's go. Good. Very nice. Okay, we're gonna go out, out, in. Okay, start with this one. 4, 3, 2, and 1. Let's go. And out, out, in. Good. Up. Think about coming up and down. Up and down. Then the knee. Up. Down. 4, 3. Good. 2. walk good, very nice, guys. Last thing you do, just kick, low kick again. Yep, here's a 4, 3, 2, and 1, let's go. Low kick. Good. Woo, just like that. Now just check your core. Yeah, we're getting ready to start stretching, so we're going to make sure more tight to that as well. Because we're done, don't you know, let it all hang out, right?
We have to show our Steel City abs.
Steel City abs. That's right, you
I
got
don't
it.
have any here, but these people do.
Here, 4, 3, 2, and 1. Good, very nice, guys. Let's stretch it out. Arms open, bend those knees. We're going to lean over to the side. Woo! Holding those abs. Oh, yeah. Good. Up. Now let's go to the other side, please. Here we go. Woo! Oh, man. Oh, yeah. Good job. Let's take our shoulders forward back. Woo! One more. Oh, man. And good. Woo! All right, we're going to turn to the side. So you guys see everything that you do for your body. Let's lean it forward, pressing that hip down, pressing that heel down. Everything you do for your body is for its benefit as far as the athleticism, the fitness goes. If you used to be an athlete, if you're still an athlete, if you want to be an athlete, everything can benefit you. Man, you've got to stretch, you've got to take care of your body, and walking is one of the ways to do it. All right, maybe Bruno Sammartino lifted heavy iron. Well, we don't have to lift heavy iron to see Bruno Sammartino strong. Let's go. But you can think about it in your head. When I look in the mirror, I think, Bruno Sammartino. Here we go. Very nice. Good job, everybody. All right, how we feel?
One mile, yay!
We're so excited.
Chị biết sai để đâu chị? Trở lên cho em rồi.
Next time, thank you for watching. We'll see you at home.
Yay! It's funny. Nick is really funny.
Yeah, good. 4 more. Let's go. 3. That's good. Hang it in. Good. Just walk good. Very nice, guys. Last thing you do, just kick, low kick again. Yep. Here's a 4, 3, 2, and 1. Let's go. Low kick.
What's the name of the website?
Woo! Just like that. Now just check your core. Yeah. Get ready to start stretching.
Vậy? Tiếng chị đi ăn nước bà. Các bạn hả chứ không phải là cho anh. Ủa đàn còn mất tiêu à?
No, bây giờ em đang xài của Samsung. Hồi nãy là
Hello everyone. Alex, have a seat.
Yeah.
So how are you feeling after 1 mile walking?
makes a big difference.
Big difference, right? We need it every day.
It's just like you're losing up already.
Yeah, you give us some energy for starting the day.
The tightness is gone.
Right. So awesome. Okay. So what are we going to do today? So we should celebrate because we just walked 1 mile. We have to celebrate everything we achieve in a day to make us feel like we are an achiever. We're not just say, we don't just talk, we do something, right, for ourselves. We don't just
Action.
take action. So the other day I post on my Facebook say, positive thinking, goal setting, planning are not enough. So what's missing in there for someone to be successful?
Action.
Action.
Yep.
Just do it, right?
Mm-hmm.
And we take action. We just walk 1 mile. Awesome. So we
It's a good start.
we should all walk 1 mile before we start our day every day, not just today. We're gonna do that every Tuesday here at Pacific Y. So please join us at exactly 10 a.m. every Tuesday, so you can walk with us. You don't want to miss this one out. 1 mile walking is awesome. Make you feel much better throughout the day, right? So much energy. I can do a lot now. I stayed up until 2 a.m. last night to record my video. I done my video at 2 a.m. and then I have to, wrap it up, make it into a video. I slept around 3 something. But look at me.
You don't sleep?
I can move mountain. I wake up at 6 a.m. this morning. How many hours I'm sleeping? 3 hours.
That's
But
it?
look at me. I have all the energy I need. And then I have another day. I'm gonna record more videos. And by the way, I can record video by myself. All by myself. All by myself. The feeling of you can independent is really good because I don't want to depend on someone to record my video because I'm planning to record videos. And if I depend on someone, then I cannot do what I want to do. So we have so many videos coming out, and so excited. I wrote this. I have the course written, ready to record. Okay. All right, everyone. How are you? People on the Zoom and here. How are you, everyone?
Good.
Good. We are good. Awesome.
Very good.
We're good. We're good.
Awesome. Awesome. I can't wait to do the Tony Robbins this Thursday, 8:30 a.m. Are you ready for it, girls and boys?
Yes.
Okay, it's gonna be this Thursday at 8:30 a.m. Thursday, Friday, Saturday, Sunday. Okay, so now we're gonna back to FHA loan. So in this today 1 hour, we're gonna learn a lot about FHA loan. I'm not sure if we can cover everything, but we'll go as much as we can. We will detail on everything we talk about, and then if we can't finish it, we'll continue it next time. We're gonna finish it at 11. All right. Do I have something to move next? Okay, cool. Okay. So first of all, what is FHA for? Why we want FHA loan? Why on earth someone want FHA? Anyone?
Low down payment.
Low down payment. Good job, Linda. Yes, because it's only required 3.5% down payment. There are more reasons to it, but the number one reason is the low down payment. In 1934, after the Great Depression, the government created this FHA loan program to encourage people to buy home, encourage people to become homeowners, to also to help the economy at that time, because the Great Depression occurred since 1929 to 1934. So many people had no job. Like the unemployment rate was from 3% to 25%. That's huge. What happened in 2020 when we had the pandemic? Was it 17% is the max, the unemployment rate? It was 17%, right? That's huge already. But in 1929 to 1934, the unemployment rate was 25%. Almost everybody, like even attorney, had no job. I remember I took one a history class in high school, and they show picture of an attorney go and sell apple, you know, because they have no job, right? They have to find a way to make money. So that's why the government came up with this program. Before that, there is no 30-year fix. Before that, always 20% down and only 7 arm. But in 1934, when they created the FHA loan, they allowed the very low down payment, 3.5%, and they have 30-year fixed loan program, so that people can stay long in the mortgage, and after 30 years they pay it off. So this is really great program. We're gonna go further to see all the good thing about FHA loan, and at the end of the program, we want to talk about, if you have a buyer who have an FHA loan, how do you win other buyer? So in order to win the other offer, you need to know very well about the FHA loan, so you can talk to the listing agent, and so that listing agent can convince the seller. So you give them all the good stuff from FHA loan, so you want to take notes, all the good thing about FHA loan, so that you can go back. Whenever you have an FHA loan buyer, you can go back, review what you take note today, and then you can talk to the listing agent. Hey, you know what? This is a good loan. Don't worry. My buyer love it, and they move forward. We're gonna close, and write your good offer. No contingency whatsoever, because your client have the pre-approval from us. There should be no contingency. Should be good, right? All right. So this for only owner occupied, meaning if you buy a property, you have to live in it. You can't just rent it out. Okay, they said never mess with the government. When you buy a conventional loan and you claim you're gonna live in it and then you rent it out, you know, if lender found out, they just make you to pay it off. That's it. but you don't have any legal issue. But for FHA loan, you don't want to mess it up. You tell your client, if you say you live in it, you live in it. Because at the moment they found out you rent it, you might end up in jail, because this is government guarantee loan. Okay? What does it mean by government guarantee loan? Meanings, government doesn't give you the loan. Lender give you the loan, but government guarantee to the lender, if your borrowers didn't pay your mortgage, you go ahead foreclose them. Whatever you lose, like, because when lender foreclose the property, they have to hire attorney. It costs them so much money, they lose money, and that when the government, the Federal Housing Administration, come in to pay for the loss, because they insure the loan. That's what it is. So this is a good loan. It's good for 1 unit, 2 unit, 3 unit, 4 unit, and it's good for condo, townhouse, but condo had to be approved by FHA. That's the only thing that make it a little bit hard. So when somebody buy a condo, if they have an FHA loan, you have to make sure that that condo is approved by FHA. If the condo is not approved by FHA, don't even think about it, because the loan not gonna go through. So in that case, you can switch it into conventional loan. I had a situation where the client buying a condo with an FHA loan, 3.5% down, and then we found out the condo is not approved by FHA. We switched it to conventional loan. There is a conventional loan, 3% down payment for first-time home buyer, so we fine. So we good, okay? So we just have to understand it, and so we can switch things around. 4 units, 3 units, 2 units. You can live in one, still owner occupy, rent out the other units. Same as VA loan. So somebody buy a 4 units, 3.5% down, and of course her income or his income have to qualify for a mortgage. And when somebody buy a 4 unit property, the loan limit really high. So FHA loan have loan limits. VA loan is different. So if you didn't attend the VA loan last time, go back to the video 2 weeks ago. We have 2 videos for VA loan. You want to go back there and review it. That's a good loan to learn too. So for FHA loan, there's a loan limit by county. Okay. So Santa Clara County, the loan limit is $970,000, but that's for 1 unit property. I think for 4 unit property, I don't remember exactly the amount, but I think it's almost 1.8 million for the 4 unit property for loan amount. 1.8 million. For example, someone buying a $1.9 million 4 units, they have 100,000 down payment, they can borrow $1.8 million loan, and that, of course, they have to qualify for the mortgage. And if they don't have enough income, what can we do? We can bring in co-borrower, right? Co-borrower, and they rent one. They live in 1 unit. They rent out the other 3, and the rental income from the other 3 unit can be used as rental income to qualify for the property that they buy. This is really, really good program, okay? For low down payment borrower or buyers. Okay, the next line we talk about, the third line in this line, 80% loan to value for refinance cash out. We were talking about purchase loan, that 3.5% down payment. For refinance cash out, the maximum loan to value is 80%. What is loan to value? If you can be, somebody knows, talk about it, so somebody doesn't know, understand what loan to value, please. You want to talk about it, Alex?
Well, that's the maximum loan amount that the government will loan on.
Yeah. I think I just want a definition. So loan to value.
Definition.
How you calculate loan to value? Loan over value, right? So the home, for example, if somebody owned $1 million home, right? And the maximum loan amount that they can borrow when they cash out is 80% of $1 million is
800,000.
800,000. 800,000 is 80% of $1 million.
Mm-hmm.
So, for example, if this person own a home, have a $300,000 mortgage in the home, that now the home value is $1 million. He or she saw that, oh, I have so many equity, let cash out. And maximum cash out is 80% of the home value. For example, the home value is $1 million at the time she refinanced or he refinanced to cash out. He can get out $800,000, big loan amount, pay off the $300,000 debt, and bring home $500,000. This $500,000 is all your money when you bring home. You don't have to pay tax because that's a loan. This is a loan. You pay more interest, but you don't have to pay tax. That's awesome, right? That's the refinance cash out. 97.75% LTV for a refinance rate term. So somebody have a mortgage and want to refinance into FHA loan. The maximum loan to value is 97.75%. For example, if the home value is $1 million, but because Santa Clara County loan limit is $970, so they can refinance rate term up to the loan amount of $970,000. Okay. All right. DTI 50%. Debt to income ratio. Debt to income ratio. This is one of the factor underwriter or lender look at the loan application to find out if they want to approve the loan or not. Normally, for conventional loan, DTI has to be below 50%. But for FHA loans, sometimes the DTI can go up to 55% and it is still approved. But it depends on case by case. And we have to run it through DU, and if DU approve it, we got approved. But we don't know in which, because it's really case by case, so we cannot list what kind of situation. But normally it works when you have a lot of assets, like money in your bank account, okay, or low LTV. That's what works. But more than 50% DTIs work too. So the mortgage team, if you see someone with over 50% DTI, and if you run DU on FHA loan, if it's approved. Even when LP approval, sometimes 52% DTI also approved under LP approval. You have to run LP and DU when you do approval for people. When you see that DTI at 50, 51, 52, 55%, run DU and LP to see if they get approval. And play with the number, put in more asset, more money in the bank account, or lower the LTV. Those two factors will help you to approve the loan with the high DTI, debt to income ratio. Remember that. Loan limits by county, we talk about it for finance property. So somebody buying a home using a FHA loan because he or she want to buy a home to live in, and if he or she already own 3 other properties, and this is the 4th property that's still working, they can still get the 4th property with the FHA loan. If they have more than 4, they might not be able to get another home with FHA loan. They might have to do a conventional loan, because a conventional loan can go up to 6 or 10 properties. So just to let you know. So FHA loan have 15-year fixed, 30-year fixed, and 5/1 off. Okay. More flexible credit score and debt requirement. What does it mean? Anyone have anything to say when you see this? I want you to remember this. This is where you want to talk to your listing agent. FHA loan is easier to get qualified than conventional loan. It's more flexible. Credit score can be 580, that low. In the credit report, sometimes you see so many liens, like tax lien, all kind of liens. But sometimes lender let you borrow it. They don't care about the liens. I saw that happening, like so many tax lien in the credit report, lenders still lend the money for FHA loan. A lot easier than conventional loan, okay? So you talk to the other side, say, you know what, FHA loan is a very good loan. It's much easier to qualify for the borrower than the conventional loan. They may say, oh, because your client have low down payment, so what? They get a loan anyway. And as long as my offer is the best offer, highest offer, no and clean, no contingency, then what's wrong with low down payment is not a problem, because we're gonna get a loan. My client gonna move forward, gonna close it, and it is very easy to get qualified and approval. That's what you're gonna talk to them about. So Federal Housing Administration insure FHA loan. We talked about it already. So talking about insurance, we talk about insurance, right? Insurance. When insurance, there's a premium we have to pay. So FHA loan, there is a mortgage insurance premium. For VA loan, there is no mortgage insurance. But for FHA loan, there is a mortgage insurance, and there is 2 mortgage insurance. Okay? The first one is a monthly mortgage insurance. That happens every month. But the second one is the upfront mortgage insurance. Upfront mortgage insurance is one-time pay at the time of purchase or the time of refinance. Okay? Upfront mortgage insurance is 1.75% of the loan amount. This is a lot, but there is a way. Whenever I do FHA loan, I never make my client pay for the 1.75% MIP. Instead, I lock in the interest rate that the lender give enough credits to pay for 1.75% upfront MIP. Because FHA loan interest rate is lower than the conventional loan. So for example, if a conventional loan at that time is 3.875% rate, but the FHA loan is 3.5, so why don't you increase it to 3.875% and cover the MIP, upfront MIP, so the client don't feel like I have to pay higher rates. If they compare with conventional loan, it's the same rate and they don't have to pay MIP. If somebody say, no, you know what, I want to have lower rates. Okay, there are 2 options. Bring in the money to pay 1.75%, or we can put that 1.75% into your loan amount. So now your loan amount is bigger, but
don't
take
have
care
to
of
pay
it. You don't have to
upfront.
pay it now.
Yeah, upfront.
So there is a way. So never be afraid to talk to your client about this upfront MIP, because we have a way to take care of it. For the monthly MIP, we talk about it later. But one thing I want to remind everybody: when you do FHA loan, there is this called MIP, mortgage insurance premium. But when you do conventional loan, the client also have to pay the mortgage insurance, but it's called PMI. PMI means private mortgage insurance, because conventional loan, the private company that sell this insurance to the buyer, not the government. So it's okay, that's a different. Private mortgage insurance, this is mortgage insurance premium. Okay, that's 2 different. Okay, in here I put 620 FICO score. Why? Even though the government said it's okay if you have a 580 FICO score. I put 620 because whatever below 620 FICO score will be very hard to get approval. Whatever below 620, it's gonna be going through what called manual underwriting. Normally, whatever over 620 FICO score, it goes into the DU approval. This desktop automatic underwriting system is much easier to get approval or not right then and then. But whoever have less than 620 FICO score, it run through the DU or the LP system. It doesn't work. So the underwriter have to look at it manually to find out if they approve the loan or not. And in that case, they will look at so many things, and it's so many conditions, and most of the time it doesn't work. Okay, so when you meet your client for FHA loan, ask them about their FICO score. If they have low FICO score, run the credit and help them to improve their score. Okay, don't let them go.
Question on the MIP. Did you say MIP can be financed on the FHA?
Only the upfront, sir.
Yeah, the upfront MIP.
Yes, only the upfront MIP can be financed
Okay.
into the loan. So that means the loan is bigger.
Yeah, but loan is bigger, but you get a better rate because you are.
Yeah,
Yeah,
because
okay.
you don't have to get the credits.
Okay.
Yes, awesome. But because of your question, so the monthly MIP in for FHA loan is only there.
Yeah.
We don't have an option to do lender pay MIP. There is no option. But for conventional loan, there is an option the lender pay for your mortgage insurance. That's conventional loan. But for FHA loan, there's no option to buy out the monthly mortgage insurance. So this table is showing you what is the mortgage insurance rate. So I'm gonna go over maybe just one or two lines because I don't want to go over everything. You can read it by yourself. So this the first right here.
Round.
The first section. There's two sections, right? The first section, it's a 30-year fix. The term over 15 years, and the below in the chart is 15 year or less. Okay, so the first section, they say if let's look at one line at the top. You see less than 90%, less than 90% LTV, meaning what? Meaning down payment more than 10%. Look at that. You see the less than 90%. Everybody see it? For some loan with less than 90% LTV, meaning have more than 10% down payment, with the loan amount less than 625,500. Okay, you see the first row, the upfront MIP is 1.75%, but the monthly mortgage MIP is 80%. Okay, all right. And they say duration is 11 years because this person have more than 10% down, so they might only need to pay the mortgage insurance for 11 years, but no one want to pay mortgage insurance for 11 years. They will find a way to get out of that mortgage insurance. Okay. Remember, the maximum loan amount in the Santa Clara County for FHA loan is $970,000. Any question here? Because I've been talking so much. Anybody have any questions? Zoom? You have any questions, people on the Zoom? No question? We can move on? Okay. So you look in the middle, the upfront mortgage insurance, every number is the same, 1.75 across. Because upfront mortgage insurance is not changing, it's the same. But the monthly mortgage insurance is changing, it's not the same. Look down on the 15-year fixed loan or 5/1 loan at the bottom. You see for the less than 90% LTV, can you move the cursor? Right here, this one. For this one, right? But this person is applying for the 15-year fixed loan and have, for example, 11% down payment. The monthly mortgage insurance is only 0.45%. Okay, look, right underneath that, if somebody have less than 10% down payment, the LTV is more than 90%, the monthly mortgage insurance is 0.70%. So that means when you have more down payment, your monthly mortgage insurance is less, right? And when you have low down payment, your mortgage insurance will be forever until you pay off your loan, right? But again, nobody want to stay in paying the mortgage insurance for the rest of the loan term, so they will find a way to refinance. So if you know someone that have a mortgage insurance right now, talk to them, ask them to come and do the refinance to get rid of it. Even though the rate is higher, but getting rid of the mortgage insurance still save the money, right? Because the mortgage insurance might be a lot. Okay. All right. What is this? Streamline refinance and simple refinance. Okay. Have you heard of streamline refinance, Alex?
Mm-hmm.
You
Yeah.
got?
Mm-hmm.
Okay. Everybody should. So streamline refinance is for people who already have an FHA loan. Okay. They have an FHA loan. Now they refinance. Because they already have an FHA loan, when they refinance again, we don't need appraisal report. We don't need tax return. We don't need W-2 or 1099. We don't need paycheck stuff. Wow. It's like a no-doc loans, basically. No, but no-doc loans still ask you to do appraisal. This one we don't need. So what do we need to submit? We will need to submit a bank statement. And we have to run the credit report, and at the very end before funding, then they will call the HR to verify verbal VOE, that means verbal verification of employment. Okay, so Also, if you look at this one, something really awesome right here. The upfront mortgage insurance is how much?
1%.
0.01%. It's like nothing, okay? And the MIP is 0.5%. So if you know someone that already own an FHA loan, and you know, if you think that we can refinance rate in term for them to lower the interest rate, this is a good program. I remember, okay, and this is no cash out, only for lower the interest rate. Okay, I remember one time long ago, I do a refinance for one client who do FHA loan. At that moment, if we look at her income, there's no way she qualified to refinance because she a business owner, and at that point, her business is really bad. She basically earned no money. But I was able to refinance for her using the Streamline program to lower her interest rate because she doesn't need to give me her tax return or whatever income to prove anything. All I need is just to run her credit and my lender verify she's still working there. That's so easy. I love it. So if you have a buyer, a client who already have FHA loan and their interest rate is so high, and they say, oh, my income not qualify for refinance, bring them back here and do a Streamline refinance for them. Okay? So this is a good one. Who qualify for FHA loan? Anybody? Who qualify?
The one have low income.
No, not low income. You have to qualify for a mortgage. It's not low income. Anyone qualify for FHA loan. If you buy the property for owner occupied. So as long as you buy a home to live in, you qualify for a mortgage. Is that awesome?
Yes.
It's really good, right? How to apply for an FHA loan? Where do we apply for an FHA loan, everybody?
Mortgage company. Pacific Way.
Pacific Way. That's very easy. You go there and you ask people, you know where to apply for an FHA loan? They will say, what? Pacific Way. We do FHA loan. We are pro. We know all about FHA loan. What else? You know, they can ask any question. We can answer all the questions. Okay? Credit requirement. Okay. Must provide credit report for a non-borrowing spouse. Okay. What is non-borrowing spouse? You know what it is, Alex or Helen or anybody here or people on the Zoom? What is non-borrowing spouse? Non-borrowing spouse.
He's not on the loan.
Not on the loan. Yeah. So there are so many times people come to me and say, we buying a home, but I only want my wife on the loan. Don't put me on the loan. Or, oh, can you only put my husband on the loan? Do not put me on the loan. For many reasons, they prefer only one person on the loan, right? Because most of the time because of the credits, but sometimes because of tax purposes, sometimes because of whatever reason they come up with. But for
Always liability.
yeah, but for conventional loan, it's okay. Okay, I don't want my husband or wife on the loan, only me. That's fine. We don't even need to run credit. We don't look at the other non-borrowing spouse document or paper or anything. We can completely ignore the non-borrowing spouse. But for FHA loan, we have to run credit for the non-borrowing spouse. Lender do care about the non-borrowing spouse liabilities. Okay? But they just look at it. I remember there's one situation where both of them have so many debts, and of course one higher one. And when they asked us to provide the non-borrowing spouse credit report, we was like, really? It might kill the deal, but they looked at it, they still let us pass. So they do look at it, but I don't know how they come up with the detail in that situation, but they let us pass that loan. So when we do FHA loan, we want to run a credit report for both husband and wife at the very beginning, even though one person on the loan. Okay, processing team, run both. Okay, 2 traditional credit score are required. Normally, we have 3 credit score, right? One from Trend Union, the other one from Equifax, and what else?
Experience.
3 of them. But sometimes, I don't know, sometimes it only show 2. But that's okay. That's okay. Cash out transaction, no mortgage late in the previous 12 months. If somebody applying for a purchase loan with FHA loan, it's okay to have 1 late mortgage payment within the past 12 months. But if they are cashing out the money, they refinance cash out, if they have 1 late payment, it's not working. Okay? Can you read me the next one, Alex? Too much?
Medical collections and charge-offs accounts with balances may be excluded from the liability or debt.
Yeah. So that's why I said it's really flexible and very easy. Because I see situation where on the credit report it show medical collection and stuff like that, and there's balance in there, but lender doesn't make the borrower to pay off the collection or the charge off, and still approve the loan, and they don't even include it into debt to income ratio. They just let it go. Very easy. Chị Vân Anh, can you read me the next slide?
Well, can I have a question first?
Yes, of course.
What's the charge-off accounts?
Oh, okay. Okay, good question. Thank you for asking. I like to talk about this. People, they go on and they charge their card. They buy Louis Vuitton, thousands of dollars, and then go home thinking, I don't want to pay for it. Let's call a credit agency. Tell them to
Close.
to do something for me, and there are services. They will do that for you. They will have to deal with the credit companies to whatever way. I don't know how they do it, but they make sure you don't have to pay the creditor the amount that you owe them, but you have to pay that service money. So I'll give you one example so it's easier to understand. I have a client. She came to me, and I run her credit, and her credit was really bad because she has so many debts. She's shopping a lot, by the way. And I asked her to fix a few things, and I forgot what was the problem, but I asked her to fix a few things on her credit report. She went to the credit agency where they do a credit prepare, and 6 months or a year later, she came back. I run her credit. This time is worse. It's more terrible than the first time I see her. I say, what's going on? And she said she had 5 credit cards and have balance on it. And that servicer told her, do not pay them. It's like 20-something thousand. You only need to pay me 5,000. I take care of the rest. And she listened to them. She's so happy because she doesn't have to pay 20,000, but she only had to pay 5,000 for the guy who said he would take care of the rest. Guess what? 3 years later, till now, I still cannot do her loan. And her credit's still a mess. Charge off meaning that you don't pay the creditors your debts, but you hire someone to work with your creditor so that the creditor cannot go after you. But it takes years to get it done. And it's messy. It's really messy. She's been paying her mortgages a lot. I only see that she lost more than 20,000 already for what she did. I was mad when she came back and talked to me, both husband and wife. I say, why did you do that? Why did you not want to pay your debts? I was mad. You're supposed to pay for what you own. And now, look at what you did. You pay somebody 5,000 to mess up your credit report completely. I cannot still do her loan until now. So that's from that day on, I never send my client to credit repair anymore because those people are bad people. They only want money. They don't care about our clients. Okay? That's sad. That's really sad. I don't want to work with any credit repair. I only want to say, okay, if you want to fix your credit, do it yourself. If I can fix something for you, I will fix for you for free. I'll show you how to fix it. But whatever you have to do it yourself, do it. Do not go to the credit repair because they're going to ruin your credit no matter what. Because they want money. They're just waiting for someone to come so they can cut their throat. $5,000. Mess up the whole thing. Okay, so that, do I answer your question about charge off? Maybe I said more than I need.
No, thank you. Thank you. That was very good. Okay, so you want me to read the next one?
Yes.
Tax liens, delinquent tax debt may remain unpaid if the borrower has entered into a valid repayment agreement and has made at least timely payments for 3 months of scheduled payments.
Okay. Okay, so people have tax lien. They maybe they don't have to still pay off or everything at once. If they have a schedule to prepayment, they can still prepayment. That's okay. Lender's still okay. So they're very easy on when they look into the credit report. They have tax lien, and like I said, there's like so many tax lien. They still allow the loan to pass. So it's good. Linda, can you read me the next one?
Judgment collection must be paid prior to closing.
Thank you, Linda. So there are things the client have to pay. Okay, collection we all know, but judgment. What is judgment? Anybody? Kivangan, do you know what judgment is? I know collection.
I understand it as the judge make you pay off something, make you. I guess they went to court, and then that's his ruling.
I see.
Is that right?
Jennifer Nguyen, I think you have something to say.
Yeah, judgment is when you in a lawsuit with someone, and then you go to court or arbitration and you lose, or for some settlement that the court decide that you owe the other your opponent, for example, some 100,000 or some amount of money, and you have to pay them.
Okay, cool.
And then they will enter the judgment into they will record the judgment. That the court will issue a judgment, and then they record it into the county, and then it would lien against your name.
Okay, cool.
And your property. So
awesome.
That's why it will show up in the prelim report that if you get a judgment from the court, it shows that you owe someone money that from the court you have to pay.
So cool. Thank you so much, Jennifer.
Okay.
It's very clear. So, for example, if they were a divorce case, and if the husband has to pay child support or alimony to the wife, that's called judgment too, right? And of course, the borrower have to pay for it. But in the divorce case, pay monthly. So, but in this case, maybe something pay one time, and it's there. You maybe have to pay it. So collection, we all know, like somebody, for example, a lot of time. We see collection because medical bill. Someone forget to pay a medical bill, and it become a collection, and in that case, then they might make you to pay that collection amount before they close the transaction. Okay. So the next one, someone wanna read for me the next line on Zoom to wake you up? Someone who wanna read it for me?
I'll read for you. Which one? The BK?
Yeah, BK.
BK 7, 11, or 13, 2 years from discharge date.
Thank you, Jivangan. So, for conventional loan, normally we need 4 years, sometimes 2 years,